All right, welcome back. If you're wondering where I was at last week, why I didn't put out a video, I was in the mountains with my buddy and also who is also my mentor. And as you can see, it's very beautiful out there, and it's one of the things that I'm pretty passionate about doing. And let's be honest, this is part of the reason that we do this stuff, right? We try to invest so we can create a better life for our children, our families, and sometimes ourselves. So anyway, back to the real world. And what I'm going to talk about today is how we did through the month of September and how we did towards our goals. So I'll get to the numbers here in a second, but since I'm making this video today, which is October 1st, might post this tomorrow, but just going to go ahead and close out September. So as a reminder for our goals, what I was really trying to do is overall just grow the account by about 1.5%, just to see if I could to grow the account. But it's more than that. I've been moving a lot of money around, and I think you guys have saw that, moving it from just pretty very safe cash holdings to more into the market, and also moving more money into that options account. So with a lot of moves like that, you're not really going to get a big cash position. You're not really going to get a lot of gains. So 1.5% for me would have been great, and we drastically exceeded that. Now, the market did very, very well, but I'm also going to show you that we did really well in the options trading, which kind of overall brought up the portfolio a little bit, but just in general, the market had a great September, and that's going to help overall. So how do we do in options? We targeted 2% just while we're kind of going through our trial run, and we actually exceeded that. And I'll show the details of that here in a second. All the options that are realized in September manifested in about a 2.2% return. And then how we're doing towards our eventual goals to target to grow the overall portfolio of around 2% a month. Again, the market did great. We far exceeded that. Not going to be like that every single month. But on the option side, I really want to target between 3 to 5%. I think 3% would be really, really good. And as you can see, overall, if I include the unrealized gains that I'll show you guys here in a second, we would be at around 3.8%. So I'm feeling pretty good about this option stuff. And of course, we didn't have to make any draws in September, but as of today, I'm going to make my first draw. Again, right now, this is my job. So it's very important that I get this right, and that's why I'm taking it slow and just studying and listening to my mentor and copying a lot of his trades, also copying some trades from options with Ryan. I started watching a new person. My mentor's been watching her for a while, trading with Ashley. She's very, very good. She does a lot of different trading, but a lot of options as well. So she's definitely somebody to go check out. I'll put a link to both of their their channels down in the description. But anyway, so overall, a really good month. And if I could continue to replicate this success, the amount of capital that I'm eventually going to throw at this account would actually it'd make me a living. So again, the goal would be to draw 10,000. It doesn't actually have to be that much, but it just rounded out to make it an even number. And the reason for that is that's a lifestyle that we would want to live around 10,000 a month. We can get away with a lot less than that, especially while I'm in light of my recent events. But getting back to a very comfortable lifestyle, that's where we want to be. So that's why I put that as a goal. And as an example, in October, I'm only going to draw probably around $7,800, but ideally the goal is eventually to get to 10,000. So far, things are going really well, and I'm pretty excited about it. So how do we do in September itself? So again, we started at around 112,000, and excluding the capital infusion, we gained around 4,300, close to 4,400 bucks in gains for this account. And of course, now that the balance on this is getting a little bit bigger, if I have another 4% month in the month of October, then this could be an $8,000 month. So that's the power of percentages, and that's why I'm really honing in on how to try to replicate these percentages, not necessarily making big, huge dollars yet, because the percentages are going to matter a lot when I throw 75 to 80% of other capital that we have at this options trading account. But what's most impressive is how my options did. So the way I have this split out is realized gains and unrealized gains. And again, at this point, it's all premiums because I've only been assigned one lot and I'll show you that here in a second. But I've now done a covered call against that, and it's just sitting there. It hasn't hit that covered call, and I'm not going to sell it at a loss. So basically, all my gains so far have just been all premiums. And the way I'm tracking this again is once the option is either expired or I close out of it. I'm tracking that as a realized gain. And the reason that's important is because while the option is open, you have the ability to close it out and basically buy it back at a lower rate. So your premium will be a net difference, a net lower amount than what it was when you started. So in total unrealized gains, these are all the options that I have outstanding. And we'll look at this here in a second. It's around $4,500. So if you combine both of those, and the reason I have them combined from an overall perspective is because if I do nothing, not one thing, and I let every one of these options expire, whether I get the shares or whether I don't get the shares, Schwab has already paid me for this $5,800. That is how much hard money I've made. Now that 4,500, considering all of those options are still open, I might buy out of some of those, so that'll go down. But the intention is to buy out of them when you see a better opportunity. And I want to show you a cookie cutter example of how we did that yesterday. All right, so a couple things to focus on. Again, I'm still moving money out of a money market fund. We've sold a lot more cash secured puts, and then we bought a leap call on Amazon for December of 2027. Now I had to pay $6,000 for that. Now it's listed as an asset, but that was hard money that came out of the account. And we'll probably get into that in the future, but just in general, working with my mentor, he does these a lot more often. And basically what it means from a high level perspective, because I don't think I'll get this perfect, I now have the right to control 100 shares of Amazon. And basically what he does is, and a lot of people do this, they don't really keep this contract all the way until its expiration. This contract will go up or down in value. And the trade that we made is on the assumption that the contract will go up in value as it gets closer to our strike price, which means I would be able to sell this contract for $7,000 or $8,000. And once I sell it, then obviously the net of the sell versus what I paid for it is the returns. So this is going to be one that we track every week and see how this is doing. This is a long-term play, could be months before this plays out the way we want it to. So if we go into the tracker, you can see, just based upon the last video, I didn't have anywhere close to this many lines. So we've been busy. I'm getting a lot more comfortable with this, and closing the open contracts is starting to make a lot more sense to me. You open a contract, basically the money gets held for the amount it would cost to buy those shares. So you can't just open endless amounts of contracts if you're doing cash secured puts. So if you're doing that, eventually the amount of capital, which right now is in that account, is about $100,000. It's all going to get tied up, and it could be tied up for months. So you could target options to expire in a week, 2 weeks, 3 weeks, 4 weeks, 6 weeks, 6 months, whatever it may be. And if you don't do anything, that money's just going to be tied up for that whole time. So ideally what you do is you find something that you like, and then you either hold it all the way to the end, or if you find something better that you like, then you can close that out, buy out of it. And that's where you see these bought back at numbers. And we did that as early as yesterday and the day before. You could see just from closed early, expired or closed early, there's 4 contracts we closed this week. And there were good reasons for those. So as a good example, I opened this contract for HIMS back on the 17th. It was supposed to expire on the 3rd, I believe, so in a couple days, October 3rd. And the stock price wasn't anywhere close to this strike price. So the contract was pretty safe, which means you can close that and you can buy out of it for a certain amount, which means it was the majority of the way through its maturity and the most it would get. So the most it would get is your full premium, which at that point when I originally got the premium for this was $57. Well, since this stock price had almost no chance in getting down to $42 in the next 3 or 4 days, because HIMS, I'd have to go look at it, but it's trading much higher than this. I was able to buy out of this contract for only $5 and realize a net gain of $52. So that's why I have in this column, which is what is my final realized premium. Again, the reason these things matter is because I'm very distinctly targeting a monthly return of around 3%, right? So when you look at the way to calculate this, since I closed it early, I changed this date from 10/3 to September 29th. And by doing that, it shortens the time frame that this money was held up. So remember, that's your return percentage. How much premium did you get for the amount of money that was held up to execute this contract? And in this case, prior to closing early, I think it was like 17 days. Well, since I closed it a few days early, it turned into 12 days. When you multiply that out over a daily return on a monthly time frame of 30 days, that's around 3% return. That's around 3% return, or almost 38% annualized. So that's phenomenal, and that's absolutely the goal. Some other really good examples were Hood. So Hood were some contracts that were supposed to close. I think there was one closing this Friday, and then one closing next Friday, and then one closing the next Friday. Well, Hood is, if anybody's following this stock, this is Robinhood, it's just been skyrocketing. So the further a stock gets away from your strike price, the further through full realization of that contract is going to be. So I was able to buy out of these and still get my pretty decent premiums. So like that's $434. Schwab paid me that. I closed it yesterday and I had to pay $78 to close it, but as the net of that is I still got $355. Well, I only had that for 11 days. 355 divided by 11,500 to hold is 3%, but the number of days to execute this contract was only 11. So that makes it an 8.4% monthly return on average, which substantially, that's 100% return if I could do this every single trade. It's not going to happen all the time, but you're going to pick some good stocks and you're going to pick some not so great ones. And we'll go through SMR here in a second, which was not a super great trade. And I got assigned at $41. So the reason I got out of Hood so urgently is my mentor and I were just talking yesterday and we were looking at the charts. We were watching some good things play out with PSIX and VST. So I needed to free up some capital because I had too much. So you can see Hood, the amount of capital that was allocated to this, i.e. tied up, was around $35,000. So I closed all these positions, realized my gains while the stock was doing good. Remember, if it's running away from your strike price, it gives you a good opportunity to close that early and realize a majority of your premium. And by doing that, it freed up enough money for me to go execute some other ones that I was interested in doing that I got yesterday for PSIX, SoFi, and VST. And by doing those, you could see just this VST one alone, it's pretty high. I mean, it's tying up around $19,000, but I got a $700 premium, and this one's already doing good. So that's an example of closing things early to free up capital to go make another move. So I was, after I had done this, I was kind of excited about it, and I was actually on the phone with my wife when I did this. She was talking to me, and I kind of saw it playing out, and I said, "Hey, hold on, I need to close a couple things, and I need to go buy this thing." She's like, "What are you talking about?" I was like, "Don't worry about it. Just give me like 5 minutes." So I did it, and I was pretty excited about it. I was pretty proud of that because this is what my mentor's been teaching me, is that you really got to have some fundamental reasons for closing a contract early. And one of them would be that you can reallocate that capital. Well, it's two, you've gotten 70 to 80% of your overall return that you sought out of that. And two, you feel like you could put that money to better use quicker. So remember, these contracts were almost all the way through their maturity. and I could go get into some brand new contracts with some better premiums and kind of start the cycle all over again. So that's what we did. So when I talk about the numbers, the final realized premiums, these are all the greens. They're all closed. There's nothing less for me to do for these. I had got paid for them when I opened them, and now that they're officially closed, either expired or I closed them, this is it. I can't. This money's now been freed up, and I can't make any more off of this unless I open a new contract. So that's what you call realized gain. These ones down here are all what's open right now. So we got quite a bit of stuff outstanding, and you can see I've got almost my whole $100,000 tied up. And remember, we're targeting 2 to 3% monthly returns, and you could see that in all my early trades, it was okay. In my later trades, it's getting better, and it's getting a little bit more consistent. You can see all these trades. Now, some of these, again, I might close out early, but if you close out early, remember the expiration date changes as well. So your monthly return, so you don't have as many days it takes to get a monthly return. So like a good example would be this AMSE. If this thing performs well and I can close out of this sooner than 63 days, this percentage, this monthly average return will actually go up. So I feel like things are working out pretty well on an overall basis. If you look at everything, going back to my sheet, you could see that we're almost 4%. So I'm exceeding average goal of around 3%. So we won't dive too deep into the charts because that's going to take up a whole lot of time, and I want to start keeping these videos a little bit shorter. The sweet spot is around 5 to 8 minutes of people before they lose attention, which I don't blame them. I'm the same way when I watch YouTube videos. So I'm going to try and keep these a little bit shorter, and this one's probably still longer than I want it to be, but we'll just keep on putting out updates each week. But all in all, I had a great September. So doing good. Can't complain. And now we're going to start adding a little bit more capital to that from some other places that I had some money stored. So now that I'm getting a little bit more comfortable with these options. So anyway, thanks again, everybody, and we'll talk to you soon.